Hello. Good afternoon, everyone. I'm surprised to see such a good crowd today. Had you all had your lunch? Anyone not yet have any lunch? Sorry, no food provided here. You're going to help yourself outside. Thank you for coming. Today, the topic we are going to talk about ETF, Exchange Traded Fund. Now, this is something that is even beyond me. Why do I say so? It's because that's not where I focus. But fear not. Today I won't be talking that much. We have all the experts here to answer your questions about ETF. Now before I get going, I would like to just share a simple thing or two. Today we're very lucky because we have both from the regulator, from the broker and investment bank side, as well as a licensed financial planner. Whatever that we are sharing today constitutes some form of explanation of this, but I want you all to take note that in the event whatever that we are sharing, you all are not sure, please seek the advice of a licensed entity, whether your remiser, broker, or your investment banks, to further elaborate it further. What we are sharing is, of course, representing our personal capacity as well as other companies that we're representing, but make your own informed decision. Okay? So without further ado, let me get this whole thing started. Okay, so ETF stands for Exchange Traded Funds. Okay? It is something that's been very popular for the past decades or so. When we talk about ETFs, some people talk about index fund. Some people talk about a basket of currencies, but in a basket of stocks that are together into a single product. But each country, each market has its own nuance. Today we are talking more from the local perspective, but we also touch a bit on the global aspect. So maybe I start off with Mr. Ong. What are ETFs and how do they work? Where can I buy and sell ETFs?
Okay, thank you very much. A very good afternoon, ladies and gentlemen. First of all, thanks for having me here today, and thanks for the first question directed to me and a long question. Okay, yeah, so I believe all the investors today here are very familiar with shares and also unit trust, but not so much on ETF. But in fact, ETF is a hybrid of these two. Similar to unit trust, ETF is an investment fund that consists or invests in a basket of securities. It can be shares, in an ETF it can have 20 or 50 shares, it can have bond or even commodities. So the objective of an ETF fund is actually to track a specific index or track the price of a specific asset. Okay, so just give an example of KLCI index. Okay, if I have a KLCI ETF, what does that mean and how does it work? It simply means that I will have an ETF or an investment fund whereby I invest in all the constituent stocks, all the 30 stocks in the FBM KLCI in accordance to their weighting. So what the investors invest in, when the investor invests into a KLCI ETF, what essentially that they have is the exposure that same as they invest in FBM KLCI. That saves their hassle of they need to go and buy all the individual stocks. KLCI index has 30 stocks inside, right? As you all know. So save the hassle of investors that need to go into that. So how to buy and sell is actually very simple. It is actually just need to just trade on Bursa exchange, trade on exchange, or if any investors that want to buy in a bigger amount like 500,000 or $1 million, they can actually approach the issuer to issue to issue a basket of ETF to the particular investors. So in nutshell, is actually imagine like a unit trust fund that the unit can be traded on exchange. That's it. Yeah.
Okay, before I let you go, Mr. Ong, tell me what are the benefits and risks of investing in an ETF?
Yeah, sure. So as I shared just now, ETF fund is actually an investment fund that consists of a basket of securities So by investing in a single security, you can have exposure in a whole basket of, shares or securities. Therefore, you will have a diversification. So this is the first benefit. The second benefit is actually very low cost. ETF is a very low cost investment instrument. It charges normally is just within the range of 0.4% to 0.6% compared to unit trust fund of 1%, 1.5% and plus, you know, all these sales charge or whatnot. Okay, and what I would like to today, I would like to share with all of you is that ETF fund is actually a passive strategy investment instrument. What does that mean is it actually just like what I have mentioned just now, it tracks the index. Okay, it doesn't mean to, or it doesn't design to outperform the index. So by this, what does that mean is that you don't need to worry that, you know, about the skill of a fund manager. You know, when you buy a unit trust fund, you need to trust that the fund manager can perform very well, you know, can make money for you. What if the fund manager's skills are not good, right? What will happen to you, right? It's on your expense, right? So, but if you buy passive strategy investment product like ETF, you don't have this problem because you will be, the fund will essentially tracking the performance of the index of the ETF. So on the flip side, of course, you know, the risk or what is the downside is that you won't have chance to outperform the market, okay, or the index because it tracks the index, right? For example, referring back to my earlier example of KLCI index, right? So if you invest in a KLCI ETF, okay, what you will get is the performance exactly, you know, same as the KLCI. You won't have chance to outperform or underperform. And the second largest risk to an ETF is a tracking error, whereby the fund manager of ETF need to make sure that, you know, your investment or the ETF is actually tracking the index well. Okay, so these are the risks.
Okay, I'm sure most of you all heard the explanation from Mr. Ong just now, but you're wondering the most burning question is, can I make money or not, right? That's why you all are here, right? So let me provide this question to Mr. Shai here, Mr. Shu here, and Mr. Shu will basically explain to us, how do ETFs compare to other investment vehicles, say mutual funds or your generic equities or even bonds? Maybe you differentiate it for our audience here today.
Okay, thank you. Thank you, everyone. Han, thank you for your question. Let's start it this way, right? An ETF is very, very similar to a mutual fund. And the key difference is the ETF is actually listed on the exchange, whereas a unit trust, I think a lot of people would have bought some, is actually sold through the banks, through your agents, and it is basically through a direct transaction. Now, for the ETF, like what Mr. Ong has mentioned, most of the ETF here on Bursa Malaysia are passively managed. And in the sense that compared to a unit trust, most of the unit trusts here in Malaysia, what the fund manager try to do is actually to beat or outperform the index or outperform its benchmark. For ETF, they will actually track the performance. So what this means is that if you believe that the fund manager can actually do a good job in actually outperforming the benchmark, then you will actually invest with the fund manager because he will add value to your investment by actually getting a return higher than the benchmark. But the challenge, if you probably, for some of you who have already invested in ETF, a unit trust before, that you realize that not always the fund manager will actually beat the ETF, beat the benchmark. So if you feel that the fund manager may not be able to beat the index or the benchmark, you might be better off just investing in the ETF which will provide you a return similar or to the benchmark or to the index. Now, then in terms of the comparison with stock, ETF provides you diversification, meaning that you invest in one ETF, it will give you exposure to maybe a basket of securities, like in example, our KLCI ETF. It will provide you investment into all 30 constituent stock of the KLCI. Whereas if you buy a single stock, you will only get exposure to that one stock. So for an investor who might not be able or have ability to actually choose the stock or to have the stock picking skill, you might be better off just investing in ETF that give you exposure to all the 30 stocks in the KLCI. Okay?
Okay, Mr. Xu, let me follow up a question. Maybe you give me an example of what are the different types of ETF available currently. Because a lot of people, maybe they know what is ETF, they know maybe overseas some kind of ETF, but they do not know locally what is available.
Okay, thank you, Han. So on Bursa, we have 20 listed ETF. You can actually categorize the ETF based on the asset classes. So we have equity ETF. These are ETF that invest in stocks. We also have one bond ETF, which invests in bonds issued by governments and also government-linked companies. On top of that, there's a gold ETF, or broadly what is known as commodity ETF. And there's also a REIT ETF, which will give you exposure to real estate investment. And the last category is what we call leverage and inverse ETF. This kind of ETF provide you exposure, 2 times exposure. For example, the KLCI 2X leverage ETF provide you 2 times the return of the KLCI. So if the KLCI goes up 1% today, the ETF will give you a 2% return on the same day. Okay? And inverse is true as well.
Okay, thank you, Mr. Xu. Now, not forgetting you, Faiz. So maybe you share with us, Faiz, in your experience, how do I choose the right ETF for my own investment goal? What should I look at?
Okay, all right. So when we are talking about investment goals, should be associated with SMART, which is specific, measurable, attainable, realistic, and timely. I think most of us already know that that's the basic part of financial goals, but when we are talking about financial goals in depth, it should be extended to certain things such as the exposure of the currency, right? So for example, I want to send my kids to Harvard, so I will not put my financial goal in terms of Malaysian ringgit, because we know it will have the currency exposure risk. So it's better for me to invest in US denominated ETF. So we have some of the ETF are denominated in the US dollar, and some of them are denominated in Hong Kong dollar also. So we have the opportunity, but we don't have the opportunity to send our kids to Cambridge because we don't have anything denominated in pound sterling. All right. So in terms of financial goals, yes, we have all these things being done, let's say for the education fund, but we also need to look in terms of the inflation rate and also the currency denomination. Yeah.
Thank you, Faiz. That's very insightful. Maybe I'll skip to this topic since Faiz, you're still on it. What do you think are the challenges facing the ETF industry? And what do you think of the prospects of the ETF industry for Malaysia?
I will answer in terms of the investor point of view, all right? Because we know this ETF is the alternative for unit trust. Some of us are very disappointed with performance of unit trust, some of the fund managers, and we know, the fund manager performance is some of the risk that you need to aware when you are investing in the unit trust. So I think the ETF should give us as investor an alternative and a better investment opportunity? Because I think most of us are already invested in the unit trust, and we know some of them are doing good, some of them, right? But some of them are not doing good. But the ironic thing is that the fund that are making money, usually they are more to indexing strategy, right? So why you want to pay more for indexing strategy when you can go for ETF for much lower fees? Yeah.
Very good insight. Now, Mr. Ong.
If I may add on to Fai's comment, so very often, you know, what are the challenge? One of the key challenges when come to investing in ETF is liquidity. I often get a question from the public or investors that, you know, I would like to, you know, I want to invest in ETF, but it seems like, you know, it's very low volume. And of course, this is true to some extent, because if you look at the traded volume of ETF, it is really low. But does that mean that when you really want to buy or sell, you won't be able to? The answer is actually no. You know why? Because there is such thing called market maker. So as an issuer, like for example, we are ETF issuer. So all the ETF issuer in Malaysia are obligated to appoint a market maker, at least one market maker for the ETF. So what market maker do is every day they will put bid and offer both sides of the price for every ETF. So if you really wants to buy or really wants to sell, despite, you know, for the past 1-2 days you see there's no trade, no volume traded, that doesn't mean you are not able to. So this is because the market maker will always be there to offer, you know, on the offer and bid side. So don't worry about the liquidity. If you look into it carefully, you know, there are ample liquidity there.
How about you, Mr. Xu? Do you want to add anything to just now the questions and the answer to both of our guests?
Well, I'll just share some statistics. Bursa actually did a survey the last couple of years to understand or to get feedback from investors with regards to ETF. Some interesting insight is this, yeah? What we have found is that more than 80% of the respondents have actually heard about ETF. But only about 16% have actually traded ETF listed on Bursa Malaysia. So what it kind of show is that there is still a lot more work to be done to actually convert these investors into taking action by buying ETF. We also, in that same survey, have asked the question, why have you not traded ETF? And surprisingly, 60% have indicated the main reason why they have not traded ETF is because they are not familiar with ETF. They do not know how it works. They do not know the features of the ETF. Hence, they are actually reluctant to invest. So, as a result, Bursa is very encouraged that there is such events like this to actually give an opportunity for investors to learn about ETF. Bursa, as an entity, we also conduct a lot of marketing activities to actually educate investors. If you have been to Bursa Malaysia website, you will see there is ample resources in terms of telling investors what ETF is. We have, through Bursa Academy, an extensive library of content of investment product in Malaysia, and this include ETF. And the Bursa Marketplace ETF website, you can actually get live information about the ETF traded on Bursa Malaysia and research report that is prepared by independent third-party research companies on ETF. So we do encourage members of the public to actually visit the Bursa Malaysia website to learn more about ETF.
Thank you, Mr. Xu. Now, we are going to move on to a more in-depth question moving forward. Just now, that was just the introduction. I know there was a lot of information there to digest, but it's all okay. So we'll try to get it up a notch, and hopefully from this, you all will be able to get more deeper understanding of how to start with ETFs, okay? Now, my question is, with ETF reaching 7 trillion AUM in US and Europe, is there still room for active fund managers in the capital markets? Why I ask this question is because, also for myself, I run a fund management company. Now, if an ETF is so good, it will replace me. So I won't have a job after this. So I want to ask you, Mr. Ong, tell me, is there still room for us to exist with ETF?
Okay, yeah. Okay, of course I dare not say that there's no room, right? No, okay, joke aside, in my view, there are always room for both active and passive strategy investment. The reason is very simple, because not all the investors are happy with, only the market return. As what, as what we have shared, ETF only track the market performance, right, or a particular index. But more often than not, there are many investors would like to outperform the market. So that is where, the skill-based fund management, fund manager or fund, or we call active management that exists and will be here, be it value investing strategy, or algo, or any other strategy, like Han, he's a very good fund manager, always outperform the market. So there are always investors that will look for this. So for me, it's just it's a preference for investors. And my advice also to many investors is that there is not necessarily that you must only choose to invest in active or passive only. You can combine this both, to build your portfolio. You can have, half of the what do you call passive investment or ETF, and you have another half in the active to outperform the market, so that you can enjoy both of the world.
Oh, that's a very good answer. Thank you, Mr. Ong. Looks like I still have a job after this. Now, anyone here heard of ARK ETF? ARKK ETF. Raise your hand. Anyone invested there and lose money? Raise your hand, it's okay. Yeah? Okay, this question is directed at Faiz, okay? So, Faiz, how should an investor evaluate an ETF and not invest in something like ARK, which has lost 67% in 2022?
Okay, the interesting thing about ARK, people only remember when they lose money. Okay? They lose 60%, but they make 4 times already, all right, 400% already, but they don't remember that. That's the thing with investment, right? So I don't really think people should avoid such things like we are welcoming, as a financial planner, we are welcoming more products that are available for our investors. Because we know with the right tools and the right management skill and the right investment methodology, then it can help the investor to get a better return. But the issue here is that most of the investors, they do not have the literacy or enough knowledge to understand what's happening. For example, when we are talking about ARK, but I wouldn't say anything specific about a fund, right? So, for example, an ARK invests in a technology which they are not like normal ETF, where normal ETF are more focusing on the market performance, but these are more focusing into a sector or theme. So when you are investing in this thematical ETF or funds, so you need to be aware what are the risks being associated and what are the market sentiment with that sector. Right? So for example, what happened in the US technology index, so it's go up very high, and then suddenly the interest rate is coming up, then it hurts the technology index. So that's what happening for the ARK. So we are not blaming the ETF or the fund managers, but the investors need to understand what are the underlying asset and how it will impact with the market situation.
Thank you, Faiz. It was a very good answer. And just to let you all know, I was doing a quick research. So in Malaysia, there's this thing called the gold ETF, right? So if anyone has invested in a gold ETF that was listed, in the past 6 months, you would have made from $2.25 to $2.80. That is the real statistics. You can go back and have a look. That is a fantastic return in less than 6 months. Yeah. So it doesn't mean that necessarily global ETF is always better than local. But not many people has invested in a gold ETF, not knowing that Malaysia actually has a gold ETF listed in Bursa. Now, this question is for you, Mr. Shu. I would like to know, how do we safeguard and educate the average retail investors out there on some of the ETFs which have illiquid holdings on large stakes of stocks that are barely traded, that when the market downturn, it may be hit harder than the others? How do we teach them that?
Okay, thank you, Han. I think the key is always education. All investment, whether it's ETF, funds, gold, all have risks. So it is important for investors to be aware of the feature, the nature of the investment, and be aware of the risks before making the investment. So we strongly encourage investors to actually seek investment advice if they are unsure before making any investment. But coming back to specifically to the question, where if an ETF have a illiquid holding, a large illiquid holding, and hit by a market downturn, how would be impact an investor? Well, if you look at from a perspective, if the investor have to invest directly in the illiquid stock, I think it will be a lot worse. And like what Mr. Ong mentioned just now, if you have actually invested in ETF, there will always be a market maker that will be there standing ready to sell or buy the ETF from you. Therefore, you can always have the ability to exit the ETF compared to direct securities.
Add on, Mr. Ong.
Yeah, so if I may, expand on, Mr. Shu's point. Okay, so referring to your question, what will happen? How do we safeguard the investors that our fund, within the ETF fund, there are stocks inside the fund that is illiquid. So let me explain a little bit on this, because as an issuer, we actually we try to safeguard the investors from the very beginning, at the point when we start to structure the whole ETF. When we structure an ETF, we will choose an index, right? So because an ETF is tracking an index. So we will study in very detail what is the constituents of the index, meaning which all the stocks, how does the index choose the stocks to be placed into the index. And one of the key criteria for a selection of stocks into index is liquidity. So meaning which we will only use the index whereby the constituents of the index or the component in the index are liquid stock. And this will be reviewed every 3 months. Any illiquid stocks will be excluded from the index and therefore will be excluded from the ETF. This is how we safeguard the investors to ensure that the liquidity of all the constituent stocks are liquid enough.
Thank you, Mr. Ong. Now, I have a question for the audience, right? Anyone here uses Stashaway, Wahid or Accrue? Raise your hand. Don't be shy, it's okay. Okay, there are some people, So, I want to ask Faiz, for digital fund management companies like Accrue, Wahid, Stashaway, the question is, are they ETF allocators or truly a digital fund management or stock pickers? What is your take on that from an investor point of view?
Okay, all right. When we're talking about these digital advisory, robo-advisory things, so They are actually taking your money and then put it in the ETF. So they have some methodologies or understandings, or for this kind of market situation, they may increase exposure in gold. For this kind of situation, they may increase their exposure in the US stocks, right? So, and I believe some of them are just focusing into one sector, right? So some of them are doing that. The thing here is that these inventions are good to help investors who do not have time or do not have the enough knowledge to allocate for their investment strategies, right? But for more advanced traders and investors, you may do this by your own, right? Because if you know, okay, I have to put, let's say, 20% for gold and the rest I have to put in the US stocks, then you can do it by your own and enjoying a much lower fee compared to using the other services. But obviously, the services come with additional value. So if you do not have any time and you do not want to spend your time to learn something new, then you may use all these kind of inventions. Yeah.
Very, very good answer. Thank you, Faiz. Now, Mr. Xu, I want to ask you, does Bursa have any incentive to promote ETF as an asset class for investors currently, or maybe in the plans in future?
Yes, Han, we do. In fact, in the last couple of years, we have ran, I would say about 4 or 5 ETF cashback or ETF reward campaign. Some of you might have actually seen it on the social media platform. And we have actually provided incentive for investors to actually try out ETF in a small quantity. But what we want is for investors to actually take the opportunity to actually explore and learn about ETF. The incentive amount is not a lot, but we want that to be at least a door opener for you to actually explore the world of ETF. Now, currently, as we speak now, there is actually 2 ETF campaign that we are running. The first one is what we call the ETF rewards campaign. You get rewarded when you trade ETF, and the campaign period runs from 1st May until 31st October of this year. And the lucky draw is trips to Langkawi, Bali, and Tokyo, covering the flight and accommodation. The second one is a campaign called Trade for Lebaran. This is a campaign rewarding you when you trade Sharia-compliant ETF and REITs. The campaign period runs from 3rd April to 3rd June this year. And in this campaign, 10 winners with the highest total traded value for the IETF will get Harvey Norman vouchers up to 4,500 ringgit. To find out more, please drop by Bursa's booth over there. My colleagues will be happy to share with you more details about this campaign.
Okay, as our time is soon running out, I want to quickly summarize, and then I want to pass the mic to the panels to answer some questions. The audience today, essentially what they want to know is ETF another vehicle or investment asset class that I can use to make money? So I want all 3 maybe to share your view on what you think about that. For example, if I put my money today, say 20% of my sum that I can invest in ETF, will I be able to make money, say, in 5 years' time? Right? That's all your questions, yeah? So I'm asking this on behalf of them. Maybe we start with Faiz first.
Okay, so I've been trading ETF for, I think, last 4 years, right? So yeah, I think the good thing with ETF is that when you understand the market, then no problem for you to make money from the market. Especially, I think the most attractive thing, the most attractive ETF that we have right now, which is the US Dow Jones 50, right? So that gives us the exposure for us to sleep at night when investing in the US market. Right, I believe if you are with the fund management, you understand what I'm talking about, right? That's the beauty of it, because for local stocks, we can buy it directly from the boss. I mean the miser or the investment brokers. But for the US stocks, it might be a challenge for us to have the access. And I believe we have the access right now, but the fees is quite highly charged. So we have the option with the ETF, and I think it's a better instrument rather than you are studying one single every stocks in the US. Yeah.
Thank you, Faiz. Mr. Shu, from a regulator standpoint.
Okay. From an exchange perspective, I think we're unbiased with respect to which ETF. We're unbiased with respect to which strategy. So I'm coming from the perspective of whether ETF is a good investment vehicle for your long-term investment. Now, I would say so, yes, because over a long period of time, one thing as an investor, when you accumulate your investment, the cost is a consideration. And ETF, I think Mr. Ong have mentioned earlier, the typical management fee ranges from 0.4% to 0.6%. Compare that to, let's say, a unit trust, an equity unit trust charges perhaps 1.8%. So if you believe that the investment in, let's say, a particular market over the long run will yield you a positive return, then perhaps you will want an investment that have a lower cost so that much of the return then can come back to you as the investor. So in that regard, whether you can make money or not, I think it depends very much about the investment climate and various factors. But at least from an ETF perspective, it is a lower cost option for you to achieve your investment goal.
Thank you. Now, Mr. Ong, would you like to add to that?
Sure, yeah. So first of all, I don't have a crystal ball. I won't know whether you invest today, 5 years down the road, you make money or not. And if you don't make money, please don't come back and blame us. Okay, so yeah, but what I'm trying to share here is that, if you were to believe that, nothing is easy when it comes to investment. It's not like you simply, tembak, simply buy something and you can make money. It's not as easy. You must do a little bit of homework. For ETF, it's actually easier to do the homework. Why? Like, for example, just now, what Mr. Faiz shared, the US 50 ETF, whereby this ETF track the largest 50 company in US. So if you have faith, if you think that today, because of US is very heavily on tech and all that, with the current AI, with the technology company can continue to do well in the 5 years, in next 5 years, then you invest in this. So for an ETF investors, it's easier because you just need to read the broad market. You feel that, this is the exposure that I want. Or like what Han has shared just now, gold. You think that gold will continue to go up, then you buy the gold ETF. So by that, you have the exposure, and I believe, you will make money from there or manage your portfolio better. So my last advice to you is, if you have not invested in ETF before, do some homework and start investing, and you will learn a lot more after you put the real money in, and you will discover more.
Thank you so much, Mr. Shu. Thank you so much, Mr. Ong and Mr. Faiz. Because of the time constraint, we will have to end the session here. First of all, thank you very much for spending your 40 minutes of your time with us. Lastly, before I go off, I think all of us at today's Invest Fair would like to share a point is that whatever you do, if you were to invest, extend a longer term horizon and look at the companies or the products that you're investing in. Make sure you are aware what you're investing in, and I believe in the long run, you should be able to beat the inflation. So thank you very much, and thank you for your time.